The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's up, Octo Nation? It's Charlie. I'm going to be your host for today. Today we're doing a curveball for you. I am going to talk about a gold and silver miner. I've been having people ask me about some plays that maybe we can get into or bring up. I think this is a great one to introduce to the SPAC family out there. Name of the company is Hycroft Mining, okay? They're the restart and future growth. These guys have had a slightly rocky past, okay? Been a little bit shaky, a little bit. They just got actually merged with but dealed together with a SPAC, okay? So a SPAC actually just rebrought them to market, kind of helped rebrand a little bit, restructure everything, just get everything right. Help put out some money. That way they can start really producing this thing throughout the full year. I was actually able to talk to the company themselves, a couple of people in there, and they're great. They're great people. They're no games type of people. They're right up front. So I got some decent information, and I definitely wanted to share it with you. So let's dive into this, okay? And they've got 18 million ounces of gold equivalent reserves and 31 million ounces of gold equivalent resources, okay? Now, for those of you who don't know about gold and silver miners, if a mining company has 1 million ounces of gold, that's considered quite a bit, okay? That's like, man, that's a lot of money there. If they've got like 3 or 4 million ounces of gold, that's a lot, okay? How many of these people have? 31 million ounces, okay? One of the world's largest precious metal deposits. I agree, huge, all right? This is insane. They're in the middle of a restart that's underway. Weekly gold sales ramp up that are underway too. Producing gold since 2019, so they've actually are working. Okay, they're producing gold. They've just been held back a lot recently because they can only work like a third of the year. Okay, so when I was talking to the lady, and so what this SPAC helped them do is get these bigger, what they're called like leach pads, and it's basically places where they can take the mine material. It's super fine grade, and they basically have to like marinate it in some acid, which helps break down the gold and all that. But you need large areas to be able to do that in, and they only had a small little area, and everything in mining costs a ton of money, and so now they've got enough to be able to produce year round. Okay, so they averaged over 500,000 tons placed on leach pads monthly in 2020, which is huge. They expect to increase in excess of 1 million tons in 2021. Okay, that's amazing. Okay, they're capital light permitted expansion leach pads, majority of capex. Initial capex years 1 and 2, only 3% of NPV. Initial 5-year capital expenditure forecast of 231 million to 400 million. Of existing infrastructure includes crushers, Merrill-Crowe facilities, refinery, 4-bay truck shop, mine office, electrical, and water utilities. Okay, so they're going up a little bit. They've got all permits. I talked about this briefly in another video, but one of the other huge things about this place is it's in Nevada. Okay, Nevada to me could be the best place in the world to have a mine. Okay, it's in the United States. There's nothing crazy really going on. It's in the middle of nowhere. I don't know if you've been in Nevada, but 95% of Nevada is like desolate, like rocky-ish, deserty things. Okay, there's no tornadoes, there's no hurricanes. There's nothing going on. Okay, that's where they mine. Okay, good place to have a mine. All right. Not only that, they have no snow in most of these areas, so they can work year-round. They don't have to worry about freezes or anything breaking. All right. They've got improved heap leach recoveries using pre-oxidation, so they're just helping get more gold and silver out. Okay. The economic highlight leverage to metal prices above feasibility study. They've got 2.1 billion NPV using $1,300 an ounce gold, and $17 per ounce silver. They're almost at 3.8 billion at current spot prices. And then they have another formula here. I actually calculated it out. Okay, so at today's prices, because this is only based again on $1,300 an ounce gold. Right now, gold's around $1,800 an ounce. At today's prices, they're actually sitting on $5.55 billion worth of asset. Okay, 5.5 billion. This is a lot of silver and gold. Yeah. Hycroft is a producing stage gold and silver mining company operating in Hycroft Mine. They're open pit heap leach mining operation. And what that means is it's easy to mine. So they're not like way down in like 150 meters underground drilling walls, and it's super dangerous where the mines can cave in, and then you got the gases, the canary and the coal mine thing. You heard of that? All sorts of problems when you're totally underground. But this is basically they just pull up with the Tonka trucks, they back them up, grab the stuff, fill it with dirt, and then take it over to go get processed, and it's literally just moving dirt. They use explosives to help break it up at first too, but it's usually just top ground, and they just keep going down. It's super easy mining year round. Okay. Hycroft Mine overview: a senior scale asset with expected average annual production of approximately 366,000 ounces of gold a year. So they're doing like a third of a million ounces of gold a year, which is huge. Management has developed a capital-light restart plan that is being executed in 2020, after which the mine will begin to ramp up feasibility study production levels. Mining has been ongoing for over a year. Hycroft has fully constructed the mine and processing facility. The crusher commissioning is complete. All operating and environmental permits are in place for the initial mining and heap leach operations, with the EIS reportedly approved. Property process oxide sulfides prior to leaching. Successful recoveries in excess of 80% have been demonstrated. Now here's another massive thing when you're talking about mining. There's something called AISC, all-in sustaining costs. So how much does it cost to get that rock out of the ground is what they want to know, right? That's one thing they use to base off of. Now I'd say, just off the top of my head, maybe like the average for gold is around like, I don't know, $1,000, $1,100 an ounce. So these guys are looking like, okay, the first year, they've got a 10-year operating portfolio. First year is going to cost them about $1,200 an ounce, $1,243 an ounce. Second year, it's only going to cost them $792 an ounce to get it out of the ground. Third year, it's only going to cost them $532 an ounce to get it out, which is insanely low. Even $792 is super low. $532 an ounce to pull it out of the ground. It shows medians down below, but I just kind of want to show you this graph here. Super interesting. I'm going to link to this down in the description on the website if you want to take a look at this. The ownership in millions. So primary owners of Hycroft Mining Corporation, there's 47.9% or million. The former SPAC owners, the carryover was only 1.1. Hycroft Mining Corporation 0.5, Cantor Fitzgerald is invested in them at 0.2, and then Sprott's got 0.5%. Okay, so Sprott, I don't know if y'all know about them, but they're a huge investment fund. They do all sorts of stuff. They even sell gold and silver. The guy who started that, and he doesn't work there anymore, he just retired from there. His name is Eric Sprott, but he's like one of the highest well-known dudes in the industry. Basically, when his name is attached to stuff, people literally just follow him, and the second they hear Eric Sprott and is invested in the company, they just buy. And you can watch stocks. If he has an interview, like he has these interviews every Friday, you can watch them. If he brings up a stock in that interview, chances are it's going to go up like 20 or 30% the following day, if not instantly, like right away, within minutes. So watch out for this. This is something I haven't heard him talk about ever, and this is something to keep your eye on, because we're still getting into the ground floor of this restructuring and the new mining. Okay, so total debt, they've got $150 million in debt. I'm not sure exactly the exact financials of how the SPAC came in, but it's not insanely too bad. Obviously we always like people with zero debt, but then again, I'd rather have a place with a decent amount of debt and a ton to offer than someone with no debt and nothing to offer. Okay, all right. Let's take a look at, now this is something really important here. Here's a number that you guys might not be familiar with. There's something called NAV multiples. And what that stands for is price per net asset value. Yeah, this is a calculation they use in mining quite a bit. And basically, the lower this is, the more undervalued the company is via how many ounces they've got in the ground. So you can see here that Hycroft is trading at 0.3 times, okay, PNAV, which is this green line right here, okay? Now, these are other normal mines that are going on. The average is 1.13x. So we're way over here on the left, and most people are all the way here on the blue. And these are big miners. K92, Arrogant, Equinox, so just judging by this alone, even if we only did 3 times the amount that this is undervalued, multiples, okay? That means that we could, even to match up, let's say, with Galeno, okay? If we wanted to match up with them, our stock price should be able to 3x, and it would still be below what they're going at. Equinox could probably 4x, because they're trading at a 1.32 and we're only at 0.3, okay, per ounce. So, that's like 4x the amount. That's what we're here for, to multiply, right? Yeah, they're one of the largest precious metal deposits. We already got that. Hycroft ranks among the 25 largest gold deposits in the world on resource size, and the second largest in the U.S. So second largest gold deposit in the U.S. It's huge. 34-year mine life, provides strong leverage to gold and silver prices, with expected production approximately 366 payable gold equivalent ounces per year, including an average of over 10 million ounces of AG, which is silver annually, okay? And another reason I like this play is it's got silver, okay? So silver right now is way undervalued compared to gold. Gold is sitting right around all-time highs. I still think it's probably going to come close to doubling within about a year, but silver has a lot more run to go. Silver has about a 5x run that could still go to match all-time highs of silver. Okay, so that's huge. So we can take advantage of the massive silver spikes that are going to be coming out also. So potential resource conversion provides additional production upside and mine life extension. Substantial scale will appeal to senior producers once project has demonstrated economics/production success. So a lot of times what happens with mining is, there's always going to be the top dogs, right? There's like the top 5 or 10 companies that are just monster, massive, huge, okay? And a lot of times those little guys will come in, they'll see a company like this is relatively small just because they haven't produced and really shown what they can do, like they're saying, and they'll come in and just offer them, whatever X amount of money in a blank check and take it over and then brand it with the big company, right? So this is talking about here the largest primary gold deposits, world's largest primary gold deposits. Okay, yeah, it's sitting, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about ranked 15th in the world for biggest deposits. That's huge. And again, we're at the lower risk jurisdiction. Many of the higher gold grade deposits are in shaky atmospheres, okay? I mean, there's mines like I was talking that are dangerous just because of they're underground, but then there's ones that are nicknamed like AK-47 mines, where you've got to have guards with AK-47s guarding them at all times because they're in sketchy places in the middle of nowhere and in weird parts of countries. And there's tons of horror stories out there of the mines getting robbed and just crazy stuff. But is that going to happen in Nevada? The chances are super slim compared to other places. All right. Let's take a look at what else we got here. The estimated average annual production. We already went over that, but I mean it's super high ranked compared to, like, for instance, like Equinox. Equinox is really well known. Same with New Gold. They actually are going to be producing more gold than Equinox a year. Okay, Equinox is only going to produce 288,000 ounces a year. We're at 366. But no one knows about Hycroft. But everyone knows about Equinox. So what does that mean? We're getting in before it's cool, okay? Good time to get in. So this is the estimated average annual byproduct cash costs. Again, we're down to 550 compared to Equinox is at 910. Okay, I mean, just the numbers alone, this mining company here is just absolutely nuts. All right. So the average, what is this? The Hycroft Mine overview, the AISC, the average is the all-in sustaining cost. The average for the first 5 years is only $775 an ounce. It's so low. You usually don't see that, especially in an awesome jurisdiction like that. Like maybe in Australia is a really good place to have a mine too, but you'll see really low AICs there. But you know, having one in the United States that low is just unbelievable. So let's take a look down here. What else do we got? Free cash flow. This is another thing you want to look at. The NPV. The NPV is the net present value. Here it is. The net present value. This is another thing that miners use to measure. Okay. The higher this is, the more overvalued the company is. Okay. So like, let's say Liberty Gold. Liberty Gold's been getting hyped a lot lately. They're at 87% NPV. Hycroft is only at 3%, dude. I mean, you just can't make that up. Like Midas Gold is at 117% net present value. Okay, Hycroft is again 3%. That means completely undervalued for what they have. So when I was talking to them, they said by September that they're going to be good to go with the bigger leach pads, and they're going to over 3x production. So once they prove that for about 6 months to a year, and I think silver's going to keep going up, dude, this thing is going to be so insane. Just going to be multiplied like crazy. Current operating with its own fleet of 6 200-ton haul trucks, 2 shovels, 2 loaders, and support equipment. Supplemented with contractor fleet of 1 shovel, 7 240-ton haul trucks, and 1 loader. I like this. And this is another reason I love Nevada. 24-hour, 365 mining operations. These dudes are pumping 24/7, dude. That's what's up. You know, they got night crews, man. They recently commenced active in-pit drilling and blasting. So yeah, they just blow out the walls of dynamite, pick it up with this, throw it in the back of that, take it over here, takes it over there, throws it in there, and then just goes from there. You know, and they just start setting up these big deposits. The secondary and tertiary crushers were recommissioned and placed online in March 2019. The primary crusher was reconstructed and brought into operation in March 2019. Sulfide material is crushed at P80 of a half. Okay, coarse ore stockpiles. It's a big operation, folks. Control that an oxidation process starts at the crusher. Reagent dosing of the material headed into the crusher using the head assay data. It's more important step in the process. So again, I'll link this down below if you want to look at it more, but let's go over some highlights. The ultimate pad capacity is 550 million tons. So how big this is that they're building, okay? Progress today, all groundwork and underliner complete. The pond lining complete. Leach pad liner being placed to start 7/16/20. Expect to begin loading in Q4 of 2020. So let's get in before it's cool. Basically, got to dig it out, and they even put this plastic down. They got to put irrigation there to run those chemicals I was talking about, like the acid, to start hitting it. But unbelievable. So does anyone else have any miners that are their favorite? Put them down below. Any other ones you want me to take a look at? I gotta warn you about one of the tickers, and that is, where did it go? Oh yeah. Do not buy HYCT, okay? HYCTW or HYCT. That's like one of the older tickers. I was getting confused because there's even SEC filings of a couple of them out there, and I was like getting super confused because they have these gnarly conversion rates for the old warrants, and I was like, this sounds bogus as heck. But we need to get the tickers that are HYMC if you're going to do it, or HYMCW, which is what I'm getting, which are the warrants. You're currently sitting at right around $2. These just launched. I don't know, I think it's been about a couple of weeks. They finally split up, and now they got the new ticker for the new company after the SPAC. They do have a 1-to-1 redemption and a $11.50 strike price. All right, and if there's any more plays you want me to take a look at, be sure and put them down in the comments. If you haven't subscribed, please subscribe. It helps the channel out. And listen, there's a lot of money to be made out there. Let's get it and let's start multiplying it.